welcome. You're watching News 9 and this is Business Plus. We're bringing you stories from the world of business, policy and economy. First up, let's begin with markets as usual. With me in the studio is my colleague Suyash Maheshwari, who's sitting here to give us an update of what markets did, how they did, and in fact they did phenomenally.
Actually, Indian markets did end in the green, but it was a day of range-bound trade where Nifty traded in a range of about 70 odd points. Now, at close, Sensex was up about 0.12% and close above the 65,000 levels, which is a good news for the bulls. But we saw some buying interest in Nifty, but the index failed to close above the 19,350 mark, Shweta, which according to analysts will be a crucial resistance for the index going forward. So unless the index is able to cross those levels, we won't see any fresh buying interest. At least that's what we are getting from the experts over here. Now, mid-cap and the small-cap indices also ended with gains. Nifty mid-cap 100 was up about 0.3% and Nifty small-cap index was up about 0.5%.
All right, let's quickly get in. Gaurang Shah is the Senior Vice President at Geojit Financials, joining us live on the show at this point in time. Gaurang, thanks very much for taking time out. Is it right to say that this is the beginning of some sort of rally? Green shoots are back?
Thank you, Shweta, and good evening to all of you. So, I think we are going to spend some more time in this range of 19,200, 19,300 on the lower side, and 19,500, 600 being the top-heavy feeling where we have been a couple of times, but we have not been able to go beyond that, and there is some selling pressure. In terms of the consolidation phase, well, in a way, it is good to see this consolidation because this is a base building exercise, Shweta, as we call it, for the next move upwards beyond 19,500 and 600 as and when we go there and crossover. So the more time we spend in this consolidation zone, the better it is because it makes a very strong foundation for the next move to be able to withstand that next leg up and of course be over there and then go beyond that. So, and of course in terms of triggers also, Shweta, there is nothing much that we can look forward to. More or less, I think whatever happens in the immediate future, the only trigger that I wish would be positive rather than negative is the monsoon, the kind of deficit that we are seeing. So that may create a little bit of overall.
Hi, Gaurang.
Sorry, sir. Yes. Just a follow-up question on that. Since you talked about monsoon, a couple of other triggers, of course, expected next week as far as GDP data, trade deficit data is concerned. Monsoon, a lot of studies are saying that despite all the unseasonal and rather heavy monsoon that we've seen in this part of the region, in this part of the country, which is the north of India, and from where I come from, that is Uttarakhand and Himachal Pradesh, despite all the havoc that rain has caused, it so appears that this season rainfall could be less than what it was last year or year prior to that. The impact of El Nino could weigh in on inflation. Are you worried about that at all?
Worried, yes, definitely, because our country is largely dependent on monsoons and how kind the rain gods are, and that is primarily because, Shweta, large part of our population is associated with agri activity. Yes, in the north and the northeast, there has been heavy downpour, which has led to flood situation, crops which were standing getting washed off. In this part of the world where we are right now in Maharashtra, there is almost 60% deficit, if my numbers are right. And in southern other states like Kerala, there is equal amount of deficit. So if this deficit is going to be there, that is going to impact the agri output. And I think governmentally, rightly so, has taken steps to ban certain rice imports, some quality of rice exports that were happening, that has been banned to possibly curtail, and of course other fruits and vegetable related inflation. So in the immediate short to medium term, we may have a little bit of worry as far as inflation numbers are concerned, but I think over a long period of time, we should be able to digest that.
Hi Gaurang, Suyash. Just wanted to get your outlook on global equities, especially at a time when the three main drivers of global economy, China, US and Europe, are reeling under pressure.
Well, Suresh, I think whatever happens in China is very difficult for me to digest because there is not much of credibility, to be very frank, with the kind of news flows that come out. And of course, there is validity question also over there. And compared to China, US and some other parts of the Europe, I think we are in a much more better place, and that's exactly the verbatim that the Honorable RBI Governor also gave us when the credit policy was announced. And even other data points, if you go to see whether it is inflation, whether it is interest rates, whether it is GDP number, whether it is corporate earnings, or whether it is the IIP numbers, I think we as India are in a much more better position compared to those part of the world. And my sense is that trouble in those part of the world could be opportunity for country like India, because we have more stable and more strong data points in terms of all these things that I've mentioned. So let's hope that we do have some amount of positivity. But for the moment, yes, because there is an overhang in China, US, and other part of the Europe, rest of the Europe, there could be a short-term blip that we might have to face.
So, will it be safe to say that the current correction that we have been seeing over the last 5 weeks is because of a risk-off sentiment in global equities?
It is a little bit of risk-off. It is people just waiting and watching. Not to forget, we have a couple of state elections before we end this year, calendar year, 2023, and next year we have a much larger event unfolding. So I think there are certain, events which are likely to happen, which may possibly, restrict flows into India. But eventually it will come through. And I think the way we have lined up ourselves in terms of the growth, I don't think we are going to go anywhere, haywire as far as growth numbers are concerned. And even if you look at the kind of flows that we've seen from the start of this year, I think we should not be complaining.
Okay, and let's also get your opinion on sectoral performance. But before that, let's quickly get in Suyash to explain how various sectors performed.
Definitely, Shweta. So we saw some selling pressure in PSU and FMCG names. They were actually one of the outliers. Both sectors were outliers in yesterday's trade. Power and realty sectors both indices ended in today's trade about 1% higher. Nifty IT, which opened with gains of about 0.6%, saw some profit booking at higher levels, and the index ended about 0.3% higher. Nifty Bank, on the other hand, after scaling highs of about 44,670 levels, we saw some profit booking at higher levels, and the index largely ended flat below the 44,500 mark.
All right, Nifty Metal up by as much as 1.28%, Nifty Realty up by 1.69%. Gaurang, what is helping these two sectors?
I think purely, Shweta, if you go to see the earnings that both the private as well as public sector banks have delivered, they've been quite good. And in fact, in some parameters, they were much beyond what our estimates were. Even the verbatim going forward into this financial year, for the second, third, and the fourth quarter, our view is that credit demand is going to be very, very robust, which will keep the loan book growth at a very steady run rate. And that will possibly translate into higher levels of net interest income and margins. You have NPAs both on the net and the gross front coming down, and thereby your provisioning is coming down. And interest rates are stable. This was the third time that we saw a pause from the Monetary Policy Committee and the announcement made by the Honorable Governor. And let's hope that if the inflation doesn't going to play a spoil sport, we possibly have a longish period of pause, and then possibly in early part of 2024, first 3 calendar months, that is Jan, Feb, March, if the inflation numbers are at a comfort zone, then you might see rate cuts also coming through. It's a wishful thinking, Shweta, but let's hope for that. So I think banking and NBFCs is something that will be in focus, along with both private as well as government companies which are playing a very crucial role in defense, Make in India, Made in India. Though they have rallied over the last 1 year, I think with the kind of order book that they are talking about, there is tremendous amount of growth potential. FMCG, though it's a little bit of small dark spots, if I can say that.
Right. I wanted to come in on FMCG because it all really depends on the discretionary spending in the months to come, and all of that will in turn depend, especially in, as I said, apart from north of India, in the west of India, in south of India, it will really depend on how the monsoon pans out. All of that dependent on how much money.
Also commodity prices,
and the commodity
because
prices,
of the crude prices are rising.
Absolutely. Rising crude prices, all of that could weigh in on discretionary spending. What's your view on the FMCG sector?
So, Shweta, India has been a consumption-driven economy. Let's face it. In difficult times, you might switch over to alternative rather than going on. For example, if you would be using, say, a Dove soap, you would possibly go and buy a Lifebuoy soap. That's what the equation I always tell people. But it's not like you're not going to have bath. Let's face it. So you are going to switch over to either lower segment or mid segment from high segment. But you are definitely going to consume. And as and when the situation improves, you are again going to come back lock, stock and barrel in terms of higher consumption for higher margin products. So we are extremely positive about FMCG, but like I mentioned, because of deficit drain, there may be a lower level of discretionary spend, which may possibly make consumers switch on to lower end category products, which will impact margins because higher end products, command higher margins, lower end, lower margins. So you may see a little bit of blip over there, but it's not like it's going to be long lasting.
Gaurang, before we move on to stocks that were in focus today, I just wanted to get your view on Nifty Bank. The index has underperformed the market. It is down about 3% in the last 1 month, whereas Nifty is down about 1%. What's your outlook on Nifty Bank?
Well, if I am so positive about banking and NBFCs, it gives me no reason why I should not be positive on Bank Nifty. And let me tell you one thing, and I stand to be corrected if my numbers are not right. I think Bank Nifty was the first one to make an all-time high. I stand to be corrected. Before Sensex and Nifty, Bank Nifty was the one that made an all-time high. And whenever you see outperformance in a particular sector or a sectorial index, there comes a time of consolidation. The way we are seeing in Sensex and Nifty, Bank Nifty is also going through a consolidation period. But like I mentioned, I think numbers for the next 3 quarters, that is second, third and fourth quarter, and even I would step up further, even for the next financial year, I think they are going to deliver fantastic set of numbers. And I'll put one thing very simple. If India is dreaming about becoming the next $1 trillion economy, I think banking and finance is going to play a very, very crucial role.
Okay. Let's also quickly move on to the top gainers and losers.
Yes, Shweta. So, among the top gainers today was UPL and Jio Financial Services. Now, Jio Financial Services was locked in the 5% upper circuit today after, of course, we saw a block deal where about 50 million shares of the company changed hands, and then we also got some clarity in the 46th AGM of RIL where about the business model that Jio Financial Services is going to adopt. Now the company said that Jio Financial Services will enter the insurance segment and it will offer life, general and health insurance policies. Now we also knew before that Jio Financial Services also plans to enter the mutual fund industry along with BlackRock. Now UPL was also in the news today. The stock surged about 2.5% in today's trade after HSBC said that it expects a recovery in the company by Q3. Hindalco, Tata Steel and Hero MotoCorp also ended today's session with moderate gains. Now among losers was Bharti Airtel, which it was down about 1.73% in today's trade. It was the worst hit stock among blue chips. The stock was down because...
What triggered the sell-off, Suyash?
So there was a block deal in which more than 1 crore shares of the stock changed hands at a price of about 852. So because of that block deal, Bharti Airtel saw some profit booking, but Bharti Airtel has been on a bullish run and the stock has been outperforming the market in the last couple of months. Hindustan Unilever was also under pressure today. The stock was on about 1.2%. Reliance Industries ended another session with losses of about 1% after it seems that investors were unimpressed by the announcements made in the 46th AGM of Reliance Industries, as they were expecting some timeline on the spin-off of the Jio platform and the retail business. Dr. Reddy's and Axis Bank also ended with losses of about 1% in today's trade.
All right, so Bharti Airtel down by as much as 1.73%. Reliance, in fact, recuperating some of its losses from the early trade session when the markets began. It was down by almost 1%. Geofin, good news coming in there for people who've been looking at the Jio Financial stock.
More than good news, I think there is some clarity. Like they understand now where what market Jio Financial is targeting.
Good news is also clarity is also good news.
Definitely.
The stock performance is also good news. But let's also get in Gaurang to weigh in on Geofin at this point. So we now know, Gaurang, for a fact that Geofin will enter the NBFC space. It will start offering insurance from health to general insurance. There'll also be an AMC business there? How are we expecting one entity to encompass such different businesses, from insurance to AMC and NBFC, all of that, different regulators, different set of businesses, one company? What are you seeing Jio Financials doing in future?
Well, along with that, name of BlackRock, Shweta,
Yeah.
whom they are partnering with. So, if you just look at the kind of reach that Reliance Industry has in terms of data, in terms of networking, in terms of technology, in terms of cash on balance sheet, and the announcement made yesterday in terms of where all they are wanting to take Jio Financial Services. And I would also possibly look forward to some announcement on the microfinance front also, because that's going to be the driving force going forward from here on. We don't have a standalone recommendation as yet on Jio Financial Services, but I think whatever has been said, I'm quite sure that it has laid a roadmap for the next 2 to 3 years for Jio Financial Services, whatever announcement, because it will take time to possibly get their act together, get approvals, and then possibly start at ground level. As far as Reliance Industries is concerned, I think they have laid a roadmap for the next 5 to 10 years. And it's going to be, and as they rightly said, I think the new age technology driven company is what RIL is going to be known as now going forward from here on. And I think whatever they have lined up and whatever statements that are made by Mr. Ambani, I think it augurs extremely well. But the sad part is that, management will take decisions depending upon what is good for the company going forward into the future. Management will not take decisions depending upon what is the sentiment of the market. So I think it was a lot expected. I think every time AGM happens, 1 or 2 before this, I think there's a lot of rumors that fly around. But management will take decision as depending upon what is good in terms of growth for the company.
All right.
Now, Gaurang, another stock that was in focus today was Zomato. The stock surged about 2%. In the last 3 months, it has surged about over 70%. What's your outlook on Zomato? Should investors book profits now, or is there more rally to come?
And this is the most difficult question that people ask me. Should you book profits or should you stay invested? Now, it all depends upon what's your appetite. Okay. So, if you bought it at 60 and if you're getting a 90 plus levels, I think wisdom and common sense should prevail upon you. But let me give a couple of disclosures before I go ahead with Zomato. We have a buy coverage on Reliance Industries. We have a buy coverage on Zomato also. I think we are targeting somewhere close to about 110 or 120. And what I am extremely excited about is forget about the food delivery business. They are doing well. But I think the Blinkit business, that is, provisions getting reached to your doorstep, that's going to be a major contributor to the balance sheet as we go forward from here on. And if you look at just the numbers that the management is talking about, I think it will do well. Yes, there were block deals in the past. There was block deal very recently. That may possibly act as an overhand or the counter for maybe a short period of time, maybe intraday or maybe 2 days. But what people don't see is that if some big guy is selling out, some other big guy is buying into it. So I would look at the second part of it. And I'm quite sure Blinkit contribution will possibly augur extremely well on the balance sheet.
All right, Gaurang, as much as we would like to have this conversation for a few more minutes, we're run short of time. Thanks very much. Always a pleasure having you on the show. Thank you so much for taking time out.
Thank you, Shweta. Thank you.
Shifting focus now, Adani-Hindenburg case, which was expected to be heard in Supreme Court today, has been deferred. The Apex Court was expected to hear the Adani matter and decided on the status report provided by Securities and Exchange Board of India, the capital markets regulator body, on allegations made in the Hindenburg report. Now, SEBI submitted a status report, remember, on 25th of August, last Friday, concerning its inquiries into the accusations made by short seller Hindenburg Research in January this year against Adani Group. It is being reported that of the 24 investigations that SEBI was carrying, a substantial 22 have already reached their conclusion, resulting in issuance of final investigative reports. For the remaining, SEBI said that it needs more time to seek information from external agencies. Now, upon receiving this information, the regulator will determine the future course of action in the matter. Joining us to talk about what's happening as far as Adani-Hindenburg is concerned is Shriram Subramanian, who's the founder and MD at InGovern Research. Also, in fact, joining is my colleague Krishna Kumar in the studios here. at News 9. Let's quickly get in Mr. Subramanian first to weigh in on what's happened today. So far we know that Supreme Court in fact has deferred the hearing, but there was a status report that was filed last Friday, which is the 25th of August. What came out of that status report? Is there anything out in public domain, or is it all in the realm of speculation right now?
It looks like it is all in the realm of speculation right now. Definitely what SEBI is saying, or the Supreme Court, that they have filed a status report, which is sort of an interim report with the Supreme Court, so that Supreme Court can take cognizance of it. But the hearing itself, Supreme Court has to examine it. The lawyers on either side have to examine it and see what is the next step as far as the status report goes. So for all you and I know, it is not in the public domain yet, and Supreme Court seems to have sought some more time also for taking the investigations to a logical conclusion.
Oh, you mean SEBI has sought more time?
Separate SEBI, sorry.
Right. And so there is a status report we know that has been filed. Is there a final report that is pending that was expected to be filed today? Even though the Supreme Court hearing has been deferred, will there be a report filed today?
I'm not so sure because SEBI had asked for more time. I'm not sure whether Supreme Court has given more time for this investigation. And today's hearing seems to have been pushed out for the matter that the discussion in the Supreme Court on Article 370 took precedence. And so that's where this bench could not convene, so to say. I think that's the reason why this was deferred from what I can make out.
Right, but today is the last day, in fact, on which SEBI was expected to file its final report.
Yes. So I think of the, as you had said earlier, of the 24 investigations, the SEBI has seems to have said that 22 are final in nature and 2 are interim in nature. So it is not clear out of the 2 interim in nature how many they want to rely on external agencies, because of course some of these are foreign jurisdictions. They seem to have relied on internal documents of Adani Group to explore which of them are related party transactions, which of them sort of violate the minimum public shareholding of that 75%, because who of the remaining 25%, which are the entities which may have any relation to the Adani Group itself. I think these is what the directions, or whether there were any insider trading, because that was one of the allegations. So I think these are the dimensions of the investigation that SEBI is looking into.
All right, Shriram, stay with us. My colleague Krishna Kumar, who's here with us, can perhaps run us through the events as they have unfolded since January 24th, that damning report that came out that, resulted in fortunes changing for a lot of people, but especially Mr. Gautam Adani. All Adani Group companies losing a substantial share of their market cap. Run us through what has happened so far for the benefit of our viewers who are watching for the first time, perhaps don't know the timeline of the event.
Right. January 2023 is when a research firm called Hindenburg came out with a report on possible manipulations in Adani Group stocks across all Adani Group companies, which shook investors' faith, so to speak. 24th of January is when it began. Shweta, to put it simply, we've seen the first ever immediate impact, because all of Hindenburg Research's report was all about timing. It came just before that all important follow-on public offer, FPO, of around 20,000 crore rupees, and that got cancelled. Ever since, in those times, you saw the Adani-Hindenburg stocks lose anywhere between 4 to 5% on a daily basis. And we've seen that drag on. Eventually, SEBI had to intervene, and they had to undertake their own research and put out their own report. What also simultaneously happened over the course of the last 6 to 7 months is when you saw their official auditor Deloitte leaving the firm, quitting the firm altogether. And when they quit the last company in the firm for which they were auditors for, which was Adani Ports, you saw another dip in Adani stocks after having recovered all those losses of the initial January, February, March. Adani stocks, in fact, in the second half of the last 6 months managed to recover all those losses, but then again were hit by the news of Deloitte exiting the company as its auditor. And now, as far as the latest in terms of investigations into Hindenburg research reports claims are concerned, SEBI submitted that final report on the 25th of August to the Supreme Court of India. Bear in mind, SEBI had made it clear, because of more than 12 FPIs or foreign portfolio investors being involved into the investments into these stocks and the transactions, it was very difficult to identify the finalities of that report. So SEBI, in that sense, took its time. August 14th was given 2 more weeks, and now we're at the stage where the final hearing of the Supreme Court on the Adani saga is concerned is supposed to take place, and now it looks like we have to wait all over again because it's yet another delay.
And we don't know how long for that matter.
Yeah, we don't know how long for that matter, but we do know that SEBI, incidentally, is waiting for data from 5 offshore tax havens that they're waiting for. So, there is still data that's being awaited. So more could come to light. So, I mean, I, just like you and all the investors out there, waiting with crossed fingers as to what the final status of that report is going to be.
Absolutely. And Shriram here, who's read that Hindenburg report, who has also tracked this matter very, very closely. Shriram, run us quickly through what are these 24 allegations that SEBI is looking into. We understand 22 have been addressed. There are 2 allegations where SEBI needs more cooperation from international agency, which is what it's seeking and why it needed more time. It hasn't got that, those documents that it needed, that cooperation that it needed. But run us through what are these 24 allegations and the other 2 remaining allegations.
No, that's what, as I mentioned earlier, these allegations relate to, one is violation of the Securities Contract Act itself, which is securities regulations. 2 is whether there has been failure to disclose transactions with related parties, and that is where the minimum public shareholding comes, whether some of the foreign FPIs, which is foreign portfolio investors, are actually related to the Adani group itself or likewise. And so that is where the eventual beneficial holders of some of these foreign portfolio investors need to be investigated, whether they are coming through Mauritius or some other jurisdictions, whether they are shell companies. If so, where do they track through, who is the eventual beneficial owner of those entities. 3 is whether there has been any manipulation of stock prices in that sense, because there was definitely the fact that the stock prices of many of the Adani group companies were going higher and higher as if that's not tomorrow. So whether it's some brokers, whether it is partly by the company or some other group companies or somebody related to the group, etc. I think this covered the ambit of the SEBI investigation. The problem was even the direction by the Supreme Court was not very clear or very, it was all encompassing, so to say. So from that perspective, SEBI had to look at all the aspects across all the Adani group companies. So from that perspective, these were the 3, whether there was any contravention or violation of any Securities Act. So that, I think that is the overarching thing. And this data being sought is from foreign jurisdictions to determine the eventual beneficial owners of these investors, FPIs, so to say.
All right, and of course the data will take time before it's received. We don't know if it's been received so far or not. But on the fundamental question, Shriram, for all those watching out there, has Adani Group got a clean sheet or not? Because there have been various reports, contradictory reports at that. A lot of, one extreme to another extreme. A lot of media reports out there that say Adani Group has got a clean sheet. Other set of people who say not a clean sheet as yet. In fact, SEBI is asking and hoping for more time because it may have found short selling in certain group stocks. All of it in realm of speculation. We at News9 cannot independently verify any of that. But what is the current status so far? Is there a clean sheet or not a clean sheet?
No, the aspect of short selling is by Hindenburg. It is not nothing to do with the Adani Group per se, and the matter of investigation by SEBI. SEBI is investigating into whether the Adani Group had any relationships with the foreign institutional investors who are shareholders of Adani Group companies, and nothing to do with short selling. So from that perspective, or whether there has been any price rigging, insider trading, etc. So we still don't know whether it's a clean sheet. I wouldn't say it's a total clean sheet for the Adani Group. Definitely, SEBI seems to have made some progress and tabled documents or some interim report with the Supreme Court. To that extent, they have made progress. But definitely, Supreme Court and SEBI have not come out with anything scathing as yet, or fined or prosecuted or anything with the Adani Group. So it is still, I would think, in limbo. That is the final word that one can say.
All right. So it's a wait and watch, Shriram?
Yeah, it's a wait and watch, and I think all of us have to hope that the SEBI investigation and the Supreme Court final ruling will come out soon.
Okay, so while we wait and watch, let's also quickly understand from Suyash, who's joining us back here in the studio. Suyash, how are markets reacting to this wait and watch process? Are they positive? Are they jittery? What's happening on performance as far as all stock performance of Adani Group is concerned on Dalal Street?
Definitely, Shweta. So the group, the 10 listed stocks of the Adani Group has seen some recovery since March lows. Now, in fact, Adani Enterprises and Adani Ports are among the top gainers in the Nifty pack in the last 3 months. Now, even in today's session, both twins in the Nifty pack, Adani Enterprises and Ports, ended with moderate gains. Adani Enterprises was up over 1%, whereas Ports gained nearly 2%. Now, transmission, ACC, NDTV, on the other hand, saw some selling pressure, but this is in light of the recent run-up, where the stocks have run up as much as 40 to 50% from their January lows. But that said, there is a lot of opportunity if Adani gets a clean sheet. The stock prices are still significantly below the January 24th closing prices.
So just the one thing I wanted to check with Suyash, we thought that, say, post March 2023, the Adani stocks were on a recovery path from March, April, May till June onwards, and they were back to pre-January levels. Would you say that post Deloitte's exit, they're not exactly back to pre-January levels as of date?
Actually, after Deloitte's exit from Adani Ports, we saw some correction as a result of it. But then, since then, even the stocks have bounced back. Adani Enterprises, for example, which was trading about 2200 odd levels, is currently sitting at about 2500 levels.
Right.
Adani Ports, which was about 750, is currently about 820 levels. So the stocks, after an initial crash, has rebounded, and the expectation is that there will be a favorable report. But then again, it's in a realm of speculation.
All right.
There's also the GQG investment that we have to take into account that's really supporting the Adani stocks these days.
Definitely, and Adani not only has brought in marquee investors, they have been able to kind of turn around. One of the biggest concerns was about Adani being over leveraged. Now the company has prepaid some of its loans, refinanced a lot of its loans, brought on marquee investors, 25,000 crores, over 25,000 crores from investors like GQG. So
it has come out strong. It has come out strong, even if it's not at par with pre-Hindenburg levels. I'm sure it's going to be there just as yet. I'm perhaps nobody to predict.
But Shweta,
at
the
this
stocks
point.
are still trading at about 30% discount, just to say.
30% discount.
So those looking for value picks, that's staring right at you in the face.
All right. I mean, a big disclaimer there. We are not professionals. We will not tell you which stocks to pick up. But again, I think data there telling its own story for all our viewers at this point in time. Let me quickly take this time and opportunity to thank Shriram Subramanian, who took his time out and who joined us on this very important story. So please do come back to us if and when that SEBI crucial report is filed in Supreme Court. We want you to be the first pick where you come out and discuss the details of that much awaited SEBI report in the Adani-Hindenburg saga. But we're going to shift focus for now. Banks could be setting up a common negative registry of fraudsters. Now, to arrest the growing menace of bank frauds, banks could make information accessible in real time to all their banking peers to prevent digital frauds and provide faster resolution of such issues through a common portal. News reports suggest that banks are initiating, in fact have initiated discussions with the Reserve Bank of India on the proposed portal. The portal will help lenders connect with each other seamlessly on such fraud cases and find a way to stop money being transferred, the fraud money being transferred to multiple bank accounts, maybe within days and hours of fraudsters kicking into action. To talk about the portal, what it can do, joining us is Kanishk Gaur, who's the CEO at India Future Foundation and also former MD of Protivity. But before that, let's quickly understand, Krishna, the menace of fraudsters and digital frauds and banking frauds. I think all of us, I'm not sure about you, but most people I've spoken to, including myself, we've been a victim. And we've been a victim mainly because on the back of how increasingly inventive these frauds have become, right? It's no more about don't click on that link, don't attend to that call, don't click on that UPI, don't scan that UPI. It's also when people call you and say, hey, I know your dad and he was supposed to pay me back, so kindly pay me back, or we will pay you back, we gave to him. I mean, it's become so inventive. It's become a big menace for banks, for regulator. How do you really work around such inventive frauds?
Absolutely. What you're talking about also talks in terms of numbers, because for financial year 2023, there were more than 13,500 digital fraud cases that were detected by the Reserve Bank of India. This is all to do with digital payments. Half of them were in the cards category. So there has been a clear rise in the percentage of cases. Imagine if more than 13,500 cases were detected by the Reserve Bank of India. How about the thousands of cases that went not even detected? So it has reached that critical mass. Absolutely. Where clearly both the banking system and the banking regulator have taken clear note of it. Everything from from spam calls to now digital frauds. Seeing portals being set up. This time around, it's the banks which are going to set up this portal. It's going to be absolutely crucial and necessary. And also, I really think this is just the first step. Okay. And the point you're making about how inventive digital frauds are getting, this is a constantly moving target that we're looking at. There'll be newer and newer ways. The portal is a great first step, but what I would want is a greater, deeper research into all the possible kinds of digital frauds that are possible in our current ecosystem of digital transactions and find ways to plug those leaks.
All right, we've got to find ways to plug those leaks and lenders coming together. Let's get in Kanishk into this conversation. Kanishk, thanks very much for joining us here on Newsline. I want to quickly get you into this conversation. And to begin with, I think the latest update, of course, is that lenders are now coming together and saying, hey, enough is enough. Let's figure out if there's a common portal that we can devise where we can share data with one another and stop this from happening repeatedly by same people. How helpful is this portal going to be, and what could be the bandwidth of such a portal?
See, this is a great start because the fraudsters not just attack one client, they attack multiple clients, and there are multiple banks which are becoming victim of such frauds, and the money then moves from these bank accounts to other bank accounts. Normally, you've seen that places like Jamtara, Mewat, and these organized crime operators have been working, and they have been crime up to 150 crore plus, where they have been able to dupe people through social engineering, calling them and telling them that they are calling from their bank, and people end up transferring money, sharing OTPs. So this common network will allow this information to be collated between banks and these bank accounts to be freezed. The first thing when you go to a police station to report a cybercrime is the police will help freeze the bank account. Now, how many bank accounts can you freeze and when do they become active? That's one of the key things. The biggest issue here is the modus operandi keeps on changing. Every time a new scamster will invent a new trick, it is not going to be the same, share the OTP. It is going to be phishing links. It is going to be, using somebody else's biometric. Today, the biggest issue is the lack of awareness of people to share their personal information with a third party. So the effective way first is to verify numbers from which these calls are coming. Right now, Department of Telecom is trying to set up a mechanism where people don't need a third-party app, but if somebody is calling you, you get a verification saying this number is a registered number or a verified number. So for spamming, the number of calls which are coming, it's very important to identify where is this number originating from? The other thing is that these databases have to be constantly updated. You just can't say, okay, we have created a database. You have to update in terms of new tricks, because today it's just not telephony. You can use simple apps and create VPN numbers. So using cloud-based telephony apps, you can create tremendous amount of numbers, and these numbers don't even originate in India. They could be from anywhere across the world. So how do you stop that? Those are some of the bigger challenges we will face, because cloud-based telephony, VPN-based numbers, very difficult. You block one, people will get 10 more numbers. You will see that today people are receiving lots of messages on WhatsApp, and these are numbers don't end up being from India. They end up being from some other countries, Sri Lanka, Bangladesh, Nepal, US numbers. So how do you stop this menace? The biggest aspect is government stops or creates regulations for some of these telephone VPN service providers to regulate to whom these numbers are being given. So you don't need a SIM today to start a WhatsApp or a Telegram channel. You could just subscribe to some of these websites which are selling it at a dirt cheap cost. So those are the bigger concerns which need to be there.
All right, and those concerns, of course, we continue to discuss here on News9. We are running a campaign for our viewers. It's called Spam Free India, where we are hoping more and more people are able to report on these spam numbers, and the government does something about it, Krishna. Yes. I mean, it's a menace that we've all tackled. Calls coming in at random hours from random numbers, and more significantly, as Kanishk pointed out, now from international numbers that you may fall prey to, and you never know whether these numbers are to be believed, not to be believed, and it becomes so very difficult for an average common person out there to be able to distinguish as to what to believe, what not to believe. Kanishk, unfortunately we've run short of time, but thanks very much for your inputs on that very crucial story. As I said, we're running a campaign here, and we're hoping you can be a part of that campaign, and you can join us very frequently to talk about the menace of spam calls, and hopefully we'll together put an end to it. I know we are very limited in power. There's very limited that we can do as media, but at least what we can do is knock on government's door to put in more preventive and administrative actions out there to prevent spam call menace from becoming bigger with each passing day. Thanks very much for taking time out. Shifting focus now, Tata Motors and its passenger electric mobility has now launched a new brand identity called Tata.ev for its electric business. All the future electric model from Tata stable will retail through this new EV sub-brand. Now, the brand identity Tata.ev has been developed with Landor and Fitch, with the implementation of a new orbit-inspired logo, EVO teal color theme, inter-typeface font, and new sound designs for all future communications on the electric products. At the moment, Tata Motor offers 3 electric models, including Tiago EV, Tigor EV and Nexon EV. The automaker received 1 lakh EV sales milestone in India, and therefore it makes all the more sense, Krishna, to have a separate brand identity for its EV business. Right, and it's they're going to go with that moniker, Tata.ev. They first used it when they launched the Tiago EV, and then of course on the Tigor EV as well. What essentially has happened is that since they launched their first EV, which is the Nexon EV, they've crossed 1 lakh in sales. So Tata Electric Passenger Mobility essentially becomes Tata.ev. Move with meaning is the tagline that they're going with. So Tata.ev essentially is not just being as a matter of being hyped out as a separate company, but also it's going to be a holistic EV player. It's looking to set up a battery architecture. It wants to create, to manufacture batteries in the future as well. To start with, it is getting fresh investment to the tune of $2 billion, with which by 2026, it would have launched 10 new electric vehicle models. So expect a barrage of EV cars from the Tata stable over the course of the next couple of years. So that's what we can expect as consumers from Tata EV, Tata.ev as it's going to be called from now on, not Tata Electric Passenger Mobility. Already too complicated to say. Tata.ev, much better. Simpler. So yeah, it was Tigor.ev, Tiago.ev, no Tata.ev. It was just simpler. No more tongue twisters. Not tongue twisters. Makes it simple. It's a plan to expand its array of electric vehicles. Bear in mind, Tata Motors, Tata Cars have a target
of making sure 50% of their production, of their sales of cars belongs to electric vehicles by the year 2030. So they are racing against time to hit that target, so that 30% of the sales is contributed by electric vehicles, and this is a major push to achieve that target.
And a lot of companies there, including Mahindra and Mahindra, Tata, and a lot more, in fact, MG Motors, which could have an Indian partner very soon, jumping on that electric bandwagon, making sure that they make use of the opportunity that is provided, and also try and fulfill that target of, you know, maybe 30 or 50% electric fleet by 2030. And it's a very far-fetched, in fact, idea. But we're going to end this discussion here with that story. But before we close, remember, in a big relief for people, the Union Cabinet today decided to cut prices of 14 kg LPG cylinder by 200 rupees. The price of the LPG cylinders will be cut for the consumers, and the subsidy will be given to Indian Oil, HPCL and BPCL. So all oil companies there. Currently, a domestic LPG cylinder costs nearly 1,053 rupees in Delhi, 1,052 in Mumbai, and 1,068 rupees in Chennai, 1,078 in Kolkata. So highest there in Kolkata. The oil companies increased the price of domestic LPG cylinders by 50 rupees in July. Earlier, the prices were increased twice in May. So this, in fact, has come as a big relief from the government at this point in time. LPG cylinders get cheaper by 200 rupees. But with that, it's a wrap on this bulletin. Thanks very much for watching.
BrahMos. Stealthy, lethal, precise. It flies at 3 times the speed of sound and cuts through a warship like a hot knife through butter. China's navy has threatened its neighbors, and they are turning to the BrahMos for protection. The Warship Killer. This and more streaming on world's first news OTT, News 9 Plus. Download now.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, Pakistan military withdraws from Balochistan, and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Balochistan?
Balochistan, Bangladesh 2.0, streaming now.